So now the next chapter. So ledger yesterday we seen, right? Ledger you will understand more when you do your practicals. Okay. Maybe practical I'll arrange this weekend. First we'll understand all the theory part. Okay. Then that will be easier. Okay. What is journal entry? Like a debit and credit, what we studied in the +1 class or something like that. So we'll see the type of journal entry which is created in general ledger. So this is the journal entry accounting cycle. Like the GL, create the open the period, create or reverse entries. Then you post it, review that, revalue or translate, consolidate, and correct the balances, run the report, trial balance. Okay, that's the given. Integrating. So you know what is integration? Integrating for other modules. So every integration runs through journal entry. It is imported journal. Okay, right. Journal you can read, performing journal entry. Okay. So what are the type of journal entry? You have manual journal, which is directly created in GL. You can reverse the journal entry. And there is a recurring, I'll tell you what is a recurring journal. Mass allocation, auto copy. So you know what is journal entry. You know reversing. Any idea what is a recurring journal entry? You can tell basic example, basic accounts. Yeah, tell me, anyone.
Sales is a recurring entry.
Sales is a recurring entry. Okay. Like that you are thinking. Okay.
Salary.
Salary. Salary is a good example. You can see the Excel.
Yes, sir.
Journal. So you know what is a journal. We already seen. Oh, what is a journal expense? Journal, you debit the expense. Like you said, debit salary, credit. Right. So what happens? Debit credit. This is a normal journal entry. So it is also created in Ocean with the accounting code. Okay. So what happened? What is a reversal of journal? You click. There are two type of reversal. Okay. Normal journal. Journal. Normally, how do you reverse? You create a reversal entry. Correct. So journal reversion first method. You go and click reverse button. What happened when you click reverse button? It will create a reversal entry and it will ask for current month is June 2021. Okay. And July. Okay. It will ask whether you want to reverse in current period or the next period. It will ask you the option. Current period or next period. Current is June or next. Okay. So okay. Okay. So we are seeing journal type. It is a normal journal, journal reversion. Journal reversion by clicking the reverse button at the top right of the journal. Last current period. So whichever period you give, it will create a reversal entry. It will credit, it will debit. So the both will be knocked off to nil. So this is a reversal entry. And one more button is there, that also can reverse it. Okay. So that while working, we can see. What are the other type we can see? We seen what is manual journal, what is reversal journal, and the other type. Recurring journal, mass allocation, auto copy. Recurring journal. You can see the Excel, right? So now, what is a recurring journal? We are in June 2021. Okay. I pay rent every month. Rent is recurring every month. And insurance or something. What happened? This is recurring every month. So there is a type called recurring. We have to create a recurring setup for recurring, and there you have to give salary for how many months? Suppose it is 12 months. Why we need a recurring journal? Suppose in this example only one line. So normally how will it come? Salary for department 001. Okay. Like that salary will have for 1000 department. You have to split and create. That's why it will create time. Okay. Every month you create 1000 line at the month end. It is not an easy task. So there are shortcuts available in the Oracle. The one is skeleton. Salary will come in skeleton journal. I will tell you why. Rent. Okay. Why I say like that? Because salary, suppose it is changing, until that you can do. Okay. So like this, rent different department 002, 003. Like that it will change. Department wise, you are paying the rent. Okay. This is called recurring. This is 1 month journal. Every month it will be recurring. June, July, August, September. So, like I said, next is future period. When you open it, will get automatically posted. That is a recurring journal. And what is auto copy? Auto copy is nothing but we have a journal. Auto copy is nothing but we have a journal. See, we have this journal. Okay. I want to copy and make another line. So just click auto copy button. Click auto copy. There is a button. It will auto copy the journal. And you can change it. Suppose I want a journal, but I want to change only the amount. This is called auto copy journal. Up to now, you all understood what is a normal manual journal. Journal reversal, recurring journal, auto copy. Now, so everybody understood? Any doubt? Mass allocation. Mass allocation. Suppose I rented entire building. Building having 10 floors, 100 offices. You can say 110 office because it will not have equally split. No? Some office may be big and some. Okay. So I am using this full complex is HCL only, but I am using 500 square feet for sales, 2000 square feet for training, sales department, training department, or finance, like that. HR 800 square feet, finance 1000 square feet, like that. Okay. So now what I'll do like this, Out of 110 officers, I am having 110 department. Maybe you can 110 departments I am having. Okay. Let's do different one in the entire complex. HCL maintains its head office in Chennai, like Wipro in Bangalore. They will have all the control. So 110 department it is there. So every month I have to pay the rent. So how I will pay the rent? I will pay to the landlord as a whole. Suppose I am paying 2,50,000 plus tax. This is the entry. I'll only one payment, single payment I will make. Okay. So, but you have to see the profit or loss, and it should be assigned to particular department. So what happened? There is an option called mass allocation. Okay. So this is 110 lines. It is there. Mass allocation, what will do? You create a skeleton journal. There is a journal called skeleton journal. What is skeleton journal? You create this all the 110 line item. Okay. With not with the amount. Skeleton journal, it doesn't require amount. It's only that is why it's skeleton. Only the particulars you create and save it. So every month you can update the amount. That is one use. And second use is mass allocation. There is a formula. A into B by C. Total cost you have to give. So I will give the total cost as 2,50,000. A is individual department. B is the total square feet. Individual square feet. 2,000. This is total square, 10,000 square feet building. So every department for 110, it will calculate by the square feet basis. You give all the square feet assigned here. The formula will calculate. Only you have to enter the amount. Once the formula is set up, it will calculate and give the output based on that to the relevant department. This is one. One, you can give the amount. Second, you can give the value also, total value, or give the journal entry or square feet. So the system will divide. We'll see in the theory. So you understood now with examples. What is manual journal, journal reversal, recurring journal, auto copy, mass allocation. Mass allocation is a very important entry question and everybody will ask. Okay. And skeleton journal. Right? Go to the theory. Okay, you can see that journal screen. You can see the theory screen, right?
Yes, sir.
Okay, journal. So you've seen all that. Now we'll see how they have explained. Okay. Basic journal entry, reversal or created by existing journal, reverse, post it, current or any future. That's what I told. Recurring. Defined once, then are repeated for each subsequent accounting period you generate. To define automatic consolidating and eliminating entry, example, intercompany debt, bad debt expense, and periodic, they given. Okay. Mass allocation utilizes a single unit formula to allocate balance across a group of cost center, division, or anything. Example, rent expense allocated by head count. You can allocate by head count or administrative cost, allocate by mission labor or whatever it is. Auto copy, modify. Okay. Right. Now, how you create? Already explained journal imported from other module, manual journal, and web edits from Excel. Organization, reversing entry, a recurring entry, mass allocation. Mass allocation will be explained down, so no need to. What are the components? Like already told, journal created as a batch, as a header, the line. Batch means directly if you create a journal also, automatically a batch name will be created. That is a component in the practical session you can see. Just you have to read it. Manual journal type. Functional currency. What is functional currency?
Ledger currency.
Ledger currency. What is ledger currency?
So basically, the transactions which is entered in this ledger.
So functional currency is the currency, our books. Okay. Like you said correctly, it is our ledger currency. It is our local currency. We can say also it is our local currency or ledger, our books currency. Maybe you are in India, we are INR. What is foreign currency other than functional currency? Okay. Statistical, we seen that without the amount, intercompany entry, intra-company we see. Foreign currency. I told no yesterday, what are the currency conversions? Spot rate, corporate, user, or any other defined type. Like that. Statistic journal, you have to use stat currency, one-sided entry. Only the account you will give, there is no equivalent credit because you do in a later period of time. Intercompany, see, when you create a ledger, there is an option enable intercompany, enable balancing account. What happens when I enter company 1 debit, company 2 credit, automatically 2 entries will be generated. That is called intercompany. Okay. Like I'll explain you. That is journal entry. This is normal only. You can read it. Any doubt you can ask.
Sir, one question.
Yeah, please.
So, I mean, in mass allocation, we used to post that statistical journal, right? Stat currency journal.
Yeah, mass allocation, we have to use only statistical journal because you are giving only accounts.
I mean, so will it not? I mean, even though we are posting it, right? The stat journal, it doesn't affect our this thing, trial balance or.
No, actually, it is a skeleton. You are not entering any amount, right? It is saved as a draft. Whenever a finance amount is entered only, it will go to the trial, it will hit the trial balance and you have to post the journal. See, when you enter the amount in this formula and it process journal, then you will post. That is a process, okay? Understand? There is a separate concept by theory. So it will not affect anything. It is just a formula. Auto post. This is all you can read. It's general only. I think you all got this theory, right? You can read. Just you can read by thinking whatever I taught in the running journal entry report. It's a report. How the report outcome will come, you can. What is WebADI? WebADI, they will have an Excel like layout and desktop integration via WebADI. This is all technical team will help us how to do it, how to create, how to define the layout. There is access. Okay. It's not an accounting term, it's not involved here. We can see it will be downloaded and you have to upload. This is not necessary. This is mostly technical. How the journal is imported, they have given in the diagram. From subledger through SLA, it will come to GL interface. GL interface tables, it will come to journal import. And once again, it comes updates these tables. GL, JE batches, JE header, JE lines. Then it posted to GL. Okay. So someone, if it is stuck in the interface, technical team will push it, will clear it, and it will come. Importing DF, descriptive flex field. Initially, I told there are 2 types of flex field, key flex field and descriptive. It is an additional optional flex field. Capture extra information, they clearly told. If you need any extra information, somewhere a DFF is there in that, you can add it. Okay. Read it. Reviewing journal, how to review it. Okay. What is summary account? Summary account is an account whose balance, sum of balance from multiple detail accounts. Remember, we created parent accounts and all, right? Summary account, online inquiry, mass allocation. It is just like a report. It is a summary of this account. You can maintain a group account. Okay. Like that. Where is mass? Advanced journal entry. Everything you have to go through and see. Recurring journal, I told you. Temporal level to salary payable, whatever it is. You create a skeleton journal, have various amounts in which you define a recurring journal without amount. See, there are two types. A recurring journal with amount, without amount. Without amount is called skeleton journal. Don't get confused. A recurring journal without amount. Then you can enter the amount. So you create a skeleton journal, then you can standard journal use fixed about combination. Like directly you can use in the recurring journal. Formula journal. Formula journal is the mass allocation journal. You use with the this journal, skeleton journal. It's a recurring entry. See, everywhere they use recurring, don't confuse it. That formula instead of calculating the amount, calculating rent expense end of the month head count based on head count. So here rent expense based on head count. I give an example based on the square feet. Create recurring journal definition. There is a concept, create recurring journal, review at the entry. Once you review, yes, you can post the entry. Everywhere you have the option of the before posting, you can do the correction. How to do the setup, they given. This we see in the mass allocation overview. Okay, now we can see in detail what is a single journal entry formula that allocates revenue and expenses across group of cost center, department, division, or cost center. Okay. This a single journal entry formula allocates revenue and expense across a department. Like here they have divided, see 1 by 3, 1 by 3, 1 by 3. See, like they said, formula entry, yes. See, what is the difference between mass versus recurring? Yes. Standard entry, yes. Skeleton entries, no. They given skeleton entry, no, because it operated by formula. Skeleton entries they given. Yes, it is entry. Currency, ledger or stat. Here, ledger foreign currency or stat recurring journal. Formula, one line, one formula per line, many line, mass allocation. Yeah, department wise you had. See, formula A into B by C, recurring anything you can do. Steps to create mass allocation journal. These are the steps in Oracle. You create a mass allocation definition. There is a mass allocation journal, review, post. Okay. These are all you can see while doing it. Okay. Single formula to allocate group, department or cost center. Same example what I told. A is cost pool, B is usage factor, C is total usage. Individual square feet, total square feet, like that. And output will come in other things. And you have three items here: looping, summing, constant. You have to say where is it loops, where it sums, addition, where the constant value stable. Practical session you will understand better. A, B, C, and TO, target account, and where the offset account. Offset account, where it should display the amount. Okay, that is the offset amount. Everything is easy when you do an exercise. Just you understand the concept now, we'll do a test. See, A, B, C, T, O. A is allocate the cost pool, the total amount. Loop through square feet footage of each department. Now they given square feet. Each department square feet I'm giving. Total square feet here. Again, each department result of A into B into C, where the result should come. Cost pool offset account, offset account. Okay. Auto allocation. We'll see practical, we'll see. Don't want to confuse. Schedule journal. You can schedule the journal also. See the navigation, recurring or autumn, when it should run. It's the automatic schedule. There are many things they have mentioned in summary. Get the main things are up to the setup. Okay. These are all you can read once and all. So they have given 2 volumes of theory. This is volume 1. We'll see volume. What all we covered in volume 1? Overview I'll show. We covered the basic general process overview. What is ledger and ledger setup? What is primary ledger, secondary ledger, accounting setup manager? What are all in that? Value set, designing chart of account, value set, chart of a segment, segment qualifier. What is segment qualifier? We didn't see it. Any idea what is segment qualifier? See, when you create a segment one by one, we are creating account, we are creating company, right? Like that we are giving. How the system will understand? See, I can create account, I can create whatever, okay. But system has to understand, right? That is called segment qualifier. So I have to give the account type, asset liability, I have to pick from the segment qualifier. Budget entry allowed, yes or no, posting. So these are all called segment qualifier, okay. So the one more called flex field qualifier. Flex field qualifier is I'm giving company or business account as first segment means I have to give flex field qualifier as what do we call flex. Here it is assigning flex field. See, when I create an account, I have to assign natural account qualifier. Then only it perform as an account. When I create a company, I have to do balancing segment because debit and credit should match. Okay, that is called balancing account. For department or cost center, I have to assign cost center. For intercompany, I have to assign intercompany. All other thing, it is optional, nothing there. So when you assign this only, system will function as per this. Okay. So these are all we have covered. What we covered that flex field qualifier, segment qualifier, ledger set, data set theory, and accounting setup manager. All the 4C will attach and calendar, currency, and everything. And basic journal entry type, we see in whatever maximum theory we can see. Summary account reporting place you can see. Advanced journal entry. Skeleton journal, recurring journal, automatic offset, recurring journal, these types. Okay. Advanced security that all theoretically, these are all volume. Okay. You can see the PDF, right? Oracle General Ledger Volume 2. You can see.
Yes, sir.
So here, what we are going to see, advanced security, that is theory only. Financial budgeting, and so multi-currency. Financial budgeting and consolidation is main setup here. And FSG, period close and financial statement generate. FSG, how to create a report. Okay. So what is budgeting generally? Anybody? Generally, how will you do a budget? What are the use of the budget? Normal scenario.
Basically, an estimation of expenses which are expected to
Yeah,
budget.
you will do a home budget or your organization. So you will estimate an expense of the future. Next month, how much is the expense? How much I have to pay the school fees, etc. Right?
Yes.
And you also put some income. This is my revenue today, and the next based upon sales or my salary, how much. So we are building an estimation based on the previous period and the next one. Correct? That is the budget. That is what we are going to do here. And what are the tools available in Oracle to do a fast budget? Like we said, same. What are all the expense and how it actuals, budget, variance. Actuals will come here, budget you already made, you see the variance. Then only you know the budget you made is correct. Somebody read this.
An Oracle budget can be set up to calculate in the same way that actuals are calculated, translated to create comparisons between budget versus actual reports and reporting currency.
What do you understand, sir, by this? Set up to calculate in the same way actuals are calculated, translated to create comparison between budget versus actual in reporting currency. So clearly it is saying in reporting currency. So reporting currency, you will report to the MD or someone we want their own currency to meet the currency. So reporting currency means it will not affect the books. I told it's a report. So budget also, it will not affect the book. Actual book and budget, everywhere you can see it's actual or budget. Even if you make in the type budget and entry, it won't affect the actual books. That is separate under budget. Okay. This is the specialty of Oracle. Like I said, non-Oracle system. Even in Excel, you can make and everybody you can upload the budget. These are the steps how you create a budget in the Oracle. Define budget and budget organization. Enter the amount, review and correct, freeze. Freeze means nobody can change after that. Report the budget. To freeze, you can change. Okay. I'll tell you what are. So based on the period, you can create a budget. Organization account. Solution you can select better. Budget also like Oracle, you can open the budget year. Current year budget, it's over. Freeze it and open the next year. Okay. Example, you do a corporate budget, sales and marketing. You budget for Western region and Eastern region. Here, public relation and trade. They given an example. You understand with the practicals. Okay. In budget, you have the auto copy of accounts because you don't want to enter each and every time. You can copy accounts, you can review or delete. You can select ranges. Suppose, like I said, one series are all expense account. 1001 to 1999, I can select everything under the budget and I can remove whatever I don't want. Like ranges. In between, you don't want any account, up to that account, you can remove. Review or assign. You can assign the budget. Auto copy. Once you do an expense budget, you can auto copy to, you want to create next profit loss account. All the expenses here, you can copy the same thing to the expense there and you can add revenue accounts. Okay. Assign the account ranges. You have to assign the account in the currency, whatever you want. Okay. Here it is detailed, but while you do exercise, it is very simple. First step, you have to define a budget organization. Task like this, you have to give yes. Budget entry method. You can enter by amount. You can copy the budget. You can upload from Excel like that. You can transfer the amount to other one. Okay. These are the option in the budget. Whatever you want, it will give. It will create amount in budgets as amount or also in the journal also. Okay. Entry mode, you can enter the amount, you can enter the journal worksheet and single row. You can enter. Okay. Okay. So these are the formulas available in the budget. When you give budget, suppose I have to enter for 12 months. So I want to divide by 445 some amount. I can select the formula which is automatically in the screen. Divide the base amount, distribute round or copy throughout the period. All the period it will copy. I give 5,000 and 12 months it will click. If I click, it will copy. These are the shortcut methods. Okay. Once everything is completed, enter budget journal. I have to click run journal import. There is a button. Then if I post, budget will be posted and I can see the budgeted TB also. Okay. Enter budget journal. Anybody can answer this? Oracle General.
False.
False.
Does not create journal entry. It is true, right? Oracle General Ledger. Oh, it is Oracle General Ledger. Okay, okay. Oracle General Ledger means if you mean it is the real GL or what do you think? You enter budget journal, it will not create in the real ones. Correct. What I understand is it will not create. I think going to does create when you create. See, in a budget type, it will create. It will not create actual. Maybe the question is a little confused. Okay. It is creating in budget books. Okay. It will not create in normal books. Translating budget. These are practically, if you see, it will be very fast only. They are just pulling